Hi, very good morning, sir, and my fellow friends. My name is Vendran. Today, my partner and I want to talk about macroeconomy topic 6. They are demand of money, supply of money, and banking system. Demand of money. People have a demand for money due to three different motives for holding money rather than other form, such as share or bonds. The three motives are: the first one is transaction motive. An individual has many things to buy in the month, depend on his or her income. Firm also purchase many goods and service daily. The transaction motive depends on the income level of individual. The higher the level of income, the more transaction can be carried out, which lead to the higher demand of this purchase and vice versa. The second thing is precautionary motive. Most individuals choose to save some money for their income and keep the rest of unforeseen circumstances such as emergency, accident or illness. Firm also keep some money for precautionary reasons. This type of demand of money also depends on the income level of the individual. The third thing is speculation motive. Some individuals like to have ready cash with them to take advantage of price change in stock and bonds. If the price of stock and bonds are expected to fall in future, speculators will need ready cash to purchase their stock and bonds. In shows, the speculative motive will perform related to interest rates. Liquidity preference. People know the hold of bonds could yield higher profit compared to holding money, yet they still prefer to hold money for liquidity purpose. Definition: the preference for an equal amount of cash rather the claim against other. Supply of money. Supply of money is controlled by central bank of country. For example, Bank Negara Malaysia. Supply of money is independent of interest rate. The supply curve of money. The method used to measure the supply of money are called M1, M2 and M3. M1 is narrow money, M2 is near money plus, M3 is broad money. M1 narrow money is a money transaction in which the money is directly used to transaction, which is currency and checkable deposit. M1 is equal to currency plus checkable deposit. M2 is near money plus M1. M2 is compress M1 and near money. Near monies are safe accounts in commercial banks and Bank Negara Malaysia certificates. M1 equal to M2 equals to M1 plus saving and fixed deposit in commercial banks plus NCD plus repo plus BNM certificate. And near money is quasi money is equal to M2 minus M1. The third thing is M3 broad money. In this thing, its only change is saving and fixed deposit in other financial institutions. It will calculate by M3 equal to M2 plus saving and fixed deposit in other financial institute. Broad near money is quasi money is M3 minus M1. These are the example of the calculation of supply money.
Hi guys, my name is Sukesh. Today I'm going to present about banking system. Banking system. It's focused on the functions of commercial banks and how they can create money, and also the functions of the central bank. Classifications of banks in Malaysia are banking institution, second non-banking financial institution, the third non-bank financial intermediaries. Banking institutions includes all financial institutions that accept current deposits. Central bank is owned and controlled by the government. Commercial banks are main functionally depository institutions where most people keep their money. Second, non-bank financial institutions. Islamic banking is based on Sharia principles. It does not allow the paying and receiving of interest since Islamic prohibits riba interest and it promotes profit sharing. Investment banks provide support services and advice to firms. financial management and portfolio management. Discount houses. The function of discount houses is to provide short-term loans in the financial market. Number 3. Non-bank financial intermediaries. Development financial institutions, which is DFI, are set up by the government to promote investment in the industrial and agriculture sectors. Employees Provident Fund, which is EPF, is designed for the benefit of employees. Commercial banks. Commercial bank is an institution that is owned by the private sector and is a profit-making institution. This bank earns the most profit from loans and investments. Functions of commercial banks: accepting deposits, providing loans and advances, providing other banking services and facilities. Credit creation. The credit creation is commercial bank uses its depositors' money to provide loans. In the procedure of granting loans, the bank will increase the money supply via credit creation. Credit creation is a process whereby a small given deposit in a commercial bank which lead to an increase in the supply of money. Process of credit creation. Thus, looking at the banking system, the process will continue until the total deposit equals 10,000. This is the max amount that can create it. Here are some formulas that can create credit creation. Formula number 1, cash ratio, which is cash reserves over initial deposit times with 100%. And the second formula is multiplier equals to 1 over cash ratio. And the third one is total money supply equals to 1 over cash ratio times by initial deposit. And the fourth formula is total reserves, which is 1 over cash ratio times initial reserve. And the final formula is total credit creation, which is 1 over cash ratio times initial loan. The central bank established on 26 January 1959 under the Central Bank of Malaya Ordinance 1958. BNM is owned and controlled by the Malaysian government. It played an active role in implementing and government's economic policy in the country. Function of the central bank: issuing currency and keeping reserves, acting as banker and financial advisor to the government, acting as banker to other banks, promoting monetary stability and a financial structure, and the last, acting as holder of country stock of gold and foreign currency reserves. Thank you very much.